Hey everybody, this is Paul. I was doing a quick little video here, giving an update during market hours. Go over the market, how I feel about the market so far in May, um, different moves I've made, that kind of stuff. So right now it is 1:28 p.m. on May the 6th, a Thursday, and currently Biden's speaking right now, so I'm kind of wondering if maybe the market might get a little boost off of that. So that's just kind of little daily moves it's doing. So, how's the portfolio doing? How's everything doing? Um, as it stands right now, I'm about $300, give or take, maybe $400 up over last video, I think. Depends how the day goes. But I wanted to go over different moves I've made, things I've bought, that kind of stuff, explain why I bought them. Um, my current performance, year to date, 10.54%, beating the NASDAQ, which this year isn't that hard. Last year was not impossible, unless you just went all in on the NASDAQ. But current estimated dividend per year, 23.54. I added something to my little sheet now. I call it the ultimate breakdown. I kind of stole this from another YouTuber. He had a cool little thing that looked like this. Sorry, had to take a drink there. So it's a yearly, monthly, daily, hourly, minute, and second, and it shows you the amount of income that you're getting, and the different formulas are right there. So for monthly, you do divided by 12, divided by 365 for daily, 87.60 for hourly. What is that? 525, 600 for minutes, and then seconds is that big number right there, like 3 million or something like that. So you just take your yearly and just divide it by different numbers to get these. I thought this would be a fun little thing to add to show like every minute I'm making like, you know, as much as Doge coin used to be worth. Um, so let's look at the market. What do I think's going on? Right now, it looks like pure profit taking. Um, Basically, if you go to the Nasdaq, people look like they're just selling their winners. Um, Pretty much, you would think. So the idea was is that if rates went down, then the Nasdaq would benefit. But if you kind of look over here, it's like, why is it down? Well, what I think is going on is people are starting to think, because the Fed and Janet Yellen and just different people are kind of starting to mention, and especially corporations are really starting to mention the word inflation. Um, I think they checked, and that was the most commonly mentioned word in the last earnings report across all the companies that did conference calls and all that. So I think what is happening is you have a lot of people that are like, well, so what? The rates are down today. We have to plan out our portfolios for a few years from now. And then one guy on Twitter suggested it might have been the capital gain stuff, and it could be that. It sounds like that might actually get done, but that wouldn't even apply to this year. That would apply to next year. They don't normally make it, it would be 2022 going forward for earnings next year. So what I think is kind of going on is people are just kind of maybe rebalancing their stuff, getting into places like the reopening trade, that kind of stuff. If you see them up today, the Dow's been up today. The small cap stuff has been up. So I think it's just a lot of profit taking. This could completely reverse in June though, so we never know. Um, I think a few of the what you can call them the COVID trades are just completely falling apart now, especially with like say Peloton taking a dump. But if you look at what happened to Apple after earnings, I mean basically everybody's like, why did Apple fall? They made just this massive amount of money. Well, the problem is they basically said, yeah, things are starting to get kind of expensive. There's a lot of things that they make our products that are now more expensive than they were the last time we did, and we're not sure that's going to affect our earnings. And whenever Apple does that, that's a very big part of the market. The market just kind of like doesn't know what to do with that. They can swing the market pretty big ways. So I'm getting my transactions so you can actually see different things I've done in the past week. So how have I adjusted to that? So since we're not seeing these days where we're up like $400 a day or something like that, Like it has really been for since the beginning of the year. Or well, it started in mid-February. So what I've done is I've taken money where I can get money. So if I get days where I'm up 3%, 4%, that kind of thing, um, especially anything I've been up in 20% on, I've been kind of selling off little minor positions, and basically reinvesting the money into the more where's it at? My dividend focused goal, this kind of stuff. So if you've noticed, if I go to my research here, if you notice, my focus has definitely shifted toward dividend paying things. So for example, right here in March 1st alone, I was at 1,500. Now I'm literally almost $1,000 more a year in dividends. And if you look at March, I had $38,000 invested, or well, like that's how much I had in my portfolio. Oh no, sorry. Here we go. I had 42,000, 42,500. Now I'm at, well, this is as of May 1st, but I was at 52,000 as of, really? 50? 50? Oh no, that's my regular portfolio. That doesn't include the IRA. The IRA is over here, sorry. But if you take this plus the IRA, but you take this, or no, sorry, this plus the IRA. It's just kind of like basically I've been really upping my dividend exposure, and it's kind of hilarious because that's where a lot of the money that people are pulling out of the Nasdaq has been going. So into more companies that have. So if rates go up, um, typically your dividend companies are the ones that they can still pay the bills, kind of thing. They have enough earnings, like Coke, Pepsi, that kind of stuff. Cisco, AT&T, JP Morgan, energy companies, that kind of stuff. Walmart, obviously. So it's not the entire Nasdaq because obviously things like Microsoft and Apple will still be able to pay the bills, but it's a lot of other little tiny companies like that rely on debt to get bigger. So there's a lot of people convinced right now that they can't ignore inflation forever. So once they do this thing called tapering, that means buying less bonds, that kind of thing. You're going to start to see the bond rates go up at a pretty fast pace. It could reverse next month. It could reverse in a week. Hell, it could reverse today. But that's kind of my feeling right now. So what have I done? Pretty much been selling any of my winners, anything that I think is kind of like a big winner, taking profits, and then redistributing that money to different places, like QYLD, for example, just different places. So if I go to my transactions, you can see I've been very, very busy since my last video. This is transactions just today. Um, PFE went down on a dip. PFE was down 3.5% today, and now it's only down 1.5% right now as it stands. But that means that I'm up 2% on it. It's because I bought it down. Now it's up higher. So doing little things like that, if it's actually oversold, and you can see things I've been buying. So I've been selling kind of like my little small winners, and then putting it into like VTRS. They report earnings on Monday. I think they're going to report really great earnings, and then also the dividend should have a date on it and all that. Um, so this could go up. I could easily get bid on this. A lot of analysts expect it to go into the $18 range. Um, so I'm still kind of a believer in them. If they bomb their earnings, I might actually just take the loss on that. I don't know. We'll have to see how that one goes. Um, Here's all my dividends I paid out. As you can see, I lined up a lot of my dividends on the first now. For some reason, E-Trade feels the need to pay me the first business day. But this was about $100, maybe $88 worth of dividends. This was a paycheck deposit I put in there. Um, so if you look, so these are all the different municipal bonds. This is Verizon, CVS, and AT&T all paid out on the same day, which is exactly how I want it to go going forward. And if you see, right here is exactly what I was speaking about before. Just kind of selling like little positions, pushing up my dividend yield percent. For example, if I was in my 40s, like if I was in my late 40s, this would actually be lower, because I would move into more things like Walmart, for example. Where is it at here? So right now I'm in a lot of things that are like around the 4% range, that kind of stuff. So you see, I have a lot of exposure, but I do have some in here that are actually, sorry, right here. This is the one I'm looking at, 4.49%. I do have some that are in lower yielding ones. So as the price of the stock is going up, the yield has gone down. So that has given me the opportunity to just take profits um, on just different things. So I've been moving it into more higher yielding things like the utilities, that kind of stuff. Pfizer, for example, QYLD, AT&T, obviously. Like, so like Walmart, for example, I spoke about that one. I think I sold like one share or maybe two shares, but I just took profits. I said in my last video, if it went up, if it went up, I think it was at 138 in my last video, and it's at 141 now, or maybe it went up to 142, and I sold like two shares. Just took profits and just redistributed it into different places where I'm up now. Verizon was one of those ones I was buying on a dip. It was down for a long time. This was at 56 for like a long time, and this was negative for a very long time, but now this is starting to go up. You'll notice I added Viacom. Today. I've been watching the stock guy. He kind of thinks it's oversold. It's an interesting looking thing that they got going on here. They did really good on their earnings. So it has an average price target of $56. For example, if you look at the different people in here, this guy says sell. Um, but that was prior to their earnings. So what I was looking at is their chart is kind of weird. It's one of those ones you have to deal with. It's kind of a weird chart. So if you actually take the chart all the way back, I swear to God, it looks just like a cruise line. Like right before we go into like these little mini recessions or big recessions, it peaks and then it dumps, and then it peaks and then it dumps. So this is the tech bubble. This is the post. This is like the George Bush era right here. In there, this is before Clinton. Well, this is right when Clinton got in. We had like a little mini recession, but we were going into a recession at this point. Um, Housing bubble right here. You see that right there? See how it kind of goes up and then it peaks, and then ever since the housing bubble, it's been kind of doing this as they've been trying to find their footing. Right before the election of Trump, it kind of peaked and then it went down. And then right before COVID, it was kind of going down, and then it became a meme stock. Well, not really a meme stock. This was actually caused by the guy, the Archegos guy, buying like God knows how much leverage on this thing. But if you go to the 1U, you can see it right here. But one of the things I'm looking at is this is one thing I was looking at in my last video is price to earnings. So the price to earnings is ridiculous. It's a 10 PE, and it's also got a 24% dividend on that right there. I mean, that's you know, it's not like it's paying every single month, but you get the idea. It's like basically it's got a really nice dividend, and the price to earnings is pretty much irresistible. And then if you look at their earnings, they beat the hell out of their earnings. So this is their earnings for Q1. Like, yeah, of course I'm gonna buy this. This is ridiculous. Um, so yeah, that's definitely one. But it's definitely one of those ones that's a trend. So it's one of those ones you have to be prepared. Like, we get into a recession, it's gonna dump, and it always dumps. Like, look at this. It dumps at or dumps at higher prices than it has before. Like right here, it dumped down to like say 8, and then here it dumped down to like say 3. But here dumped down to like 4, 10. Um, it's just one of those ones. It's jumps. I'm buying this as a dividend play. I'm gonna try not to look at the stock price of it honestly, because I don't care about the stock price on this one. It's one of those ones where if you buy it, just don't look at the stock price. It's literally like I can show you a cruise line that does that. What was that? CCL does that. Carnival is the good example. So if you look at Carnival, you go all the way to the max. See how they could do good up until we get a recession, and all of a sudden dumps. Do good up till a recession, and then it dumps. Do good until a recession, and then it dumps. I remember a guy on YouTube was telling people to buy it like right here, and I'm like, if you look at the chart, you can obviously see this thing's gonna dump. It goes up to an obvious price where you would kind of think, and the chart looks a very certain way, and then it just completely dumps. Um, I don't know why it's doing that. Somebody can feel free to explain in the comment section. Um, why it does that. I have no idea. But yeah, I bought it. Just nice dividend yield. Has it sitting there. If it runs up again, I'll take profits on it. To be honest with you. Um, if it runs up to $100 a share or something crazy, I'll sell all 21 shares. To be honest with you, because then the dividend yield would be like less than 1%. It would be horrible. But it pays out in a month that I like it to pay out in. Has a nice dividend yield. Has a 9 PE on it right now. So I think it's cheap. And then you know, so we'll have to see how it goes. Their earnings are really great though. So it's an actual profitable company with really nice PE. So I bought it. But do your own research on it if you want to buy it. So as it stands right now, I think I did those moves this morning to buy things that I thought was cheap and was just way oversold. This is the PFE shares right here. If you look at these, so on PFE, where's it at? I'm up 10.8.5%. There's very few things. There's one thing. So here's an example of buying a dip. So this is a good example of buying a dip. When you see something this oversold, look at this. I bought it at 38.27. It was down 3.5%. I'm up. So even though the stock is down 1.34%, I'm up 2% because I bought right there and now it's sitting right there. That's what they mean by buying a dip. So yeah, that's a very specific example of one that I saw that oversold and I got rid of something. I don't even know what I got rid of to be able to buy that. I should have sold more, probably, to be honest with you. I don't even know what I sold. I think I sold some Cisco. I think this is probably it right here. Yeah, look, I took it and then basically reinvested it. So I think I sold one IBM or something like that, but yeah, no, I did that later on. But this rate, I sold like 5 Cisco, which was up like 20%, and then immediately dropped it into PFE before people realized, oh, this is oversold. And this is still a multi-billion-dollar company. It's making billions upon billions. They went down because of the patent thing, but it's still going to take like a year and probably more to even set up the factories, and then they're going to realize this is really expensive to do. It's cheaper to just buy it from them. That kind of stuff. There'll be some people that try to produce it, but I mean, it's not going to be nearly as profitable for them. So yeah, I think the market way overreacted to that, especially to the Moderna thing too with the patent. I think that was just overreacting, just like it was just ridiculous how much the market overreacted. But once it started to sell, and then it got downgraded for some reason by some, but the downgrade literally said it should be a $42 stock, which is ridiculous. Like if you look at it, it went down to 37, but they said it should be a $42 stock. That's how ridiculous I hate algorithms. But actually, I like algorithms because they give me great deals in the market, but they're so stupid. I can't believe people rely on them. But so that's where we're at right now. Current market value is sitting at. This will probably be the number that goes on the video right there. I think. Yeah, I'll just have that number. But that's where we're sitting at. If you have any questions, of course, just let me know. Like I said, as it stands right now, it just looks like people are taking profits, kind of like maybe some type of like tax change, maybe some kind of policy change at the Federal Reserve. Or maybe we come in tomorrow and then all of a sudden it's like, oh, everybody's rates are down, and then the Nasdaq's up like 400 points tomorrow. Because it could easily run back to 14,000. Could easily. I mean, it's not like they've raised rates yet, and it's not like they've changed tax policy yet. So I can see the Nasdaq running to 400 or 1400 again, or 14,000 again. But there's no telling. So that's why I picked up some QYLD, to be honest with you. So we will definitely have to see. So just let me know in the comments what you think. If you have any questions, of course, just let me know like always. Thank you. Y'all have a nice day.